The stock of the day is Downer EDI, and the Aussie and New Zealand-based company shares are down this morning after reporting a $325 million loss for full year 23, despite more than 5% increase in revenues for the period. The company has described the business environment as challenging amidst greater competition and ongoing project disruptions. Downer has flagged ongoing pressures in the next half and called 2024 a transition year. Downer has reported a final dividend of 8 cents per share, down from 12 cents per share a year earlier. Grady, oh dear, these companies, these contractors, inflationary environment. I mean, I have to say it's a bit of a downer for Downer today, isn't it? It's a very corny joke. But
I'm glad you got that in there.
what are you guys thinking about Downer?
It's a hold at the moment, just because if you haven't sold out yet, it's going to go down a little bit further, and there's a bit more to run. Obviously, looking at this report, it's swung to a loss. Such a big company, they've got execution across all these different industries, and they're a leading provider of these services in the market. So again, contraction, we've got the labour costs going up, we've got labour availability problems, productivity issues, but they have noted that there are signs of stabilisation on the horizon, but when the stabilisation is the key, because it's not provided. So the horizon is a very long scope and measure, so you can't just say it's on the horizon. So understanding all of that, there will always be a need for their services, but understanding that there is so much competition in the market now, we need to look at that and say this company is in restructure mode or strategy mode, and they've got a new CEO as of the start of this year, and he has even said that they're resetting operating model in Australia and New Zealand to reduce the cost base. They're also focusing on improving margins and simplifying the portfolio. So again, that all says to me a strategic review in a somewhat nice way. So FY24 and FY25 will be interesting, but it's just a hold at the moment because it is a very strong company and their services are needed. So given that in mind, they've got a bit of strategy to work through.
Yeah, absolutely. It's not an easy sector, is it, Michael? This whole sort of contracting sector, you're often at the whims of keeping cost blowouts under control. How do you see Downer?
Look, there are quite a few moving parts. I think it makes it very difficult at this stage. I mean, they pre-announced their earnings last week. There was, they were achieving guidance. There was some non-cash impairments. So, most of it sort of expected with what they came out today. They're making a loss. I just think, on the one hand, you could say, okay, well, maybe there's a contrarian opportunity there. They've gone through the worst of it, and they can come out the other side, and these might be good levels for it. But I just think that with the strategic review, and it's not like, I guess, if we use James Hardie as an example, which sort of knocked it out of the park this week. I mean, if you looked at James Hardie earlier in the year, that would have been a good contrarian opportunity, because as a business, nothing wrong with how it was running. It was just basically at the wrong part of the cycle in terms of demand for their products, and if you could foresee that would pick up, that was a contrarian opportunity. I don't really see that with Downer, because there's a lot going on under the bonnet that they really need to fix. So I think it's too early to be involved. And for me, look, I'd even have it as a sell, just to put that money into something a bit more, with a bit more potential at this point in time.
Yeah, a bit more upside. There's too much water under the bridge, going forward. Yeah, fair enough.